All right, welcome to AI Explains ICT. Today we're diving into the core content from month 10, episode 19. Now this is the final piece of the puzzle for the month, and honestly, it's a huge one, multi-asset analysis. So you might want to grab a pen and paper for this because understanding this concept is absolutely crucial. Let's get right into it.
So we're going to kick things off by talking about something that I know and ICT himself knows might be on your mind. After going through all the material this month covering different asset classes, some of it might have felt, well, a little disconnected from what you're trying to do day to day.
Let's just be real for a second. If you're a Forex trader, you probably found yourself wondering, okay, why are we spending all this time talking about bonds and commodities and stocks? Is this really necessary for me? And you know what? That is a totally valid question, and it's one ICT tackles head on.
And look, ICT gets it. He acknowledges that feeling of skepticism right here. It's so tempting to think you can just put on the blinders, Just become a master of one single instrument and ignore everything else that's going on. But the whole point of this month's content is to show you why that approach isn't just limited, it can be downright dangerous to your account.
Okay, so let's flip that idea on its head. Let's pivot from that problem to the real solution. The reason this content is absolutely not filler is because the market isn't a bunch of separate little islands. It's one big interconnected ecosystem. And to truly be a master of your little corner of it, you have to understand the whole environment.
Here's the bottom line. You cannot trade in a vacuum. You can't just stare at a euro-dollar chart in a dark room and expect to understand what's really happening. That is a massive blind spot. It's like a heart surgeon needing to understand how the lungs and the brain work too. A trader has to understand the entire market system.
And here they are. The four pillars of that system: currencies, commodities, bonds, and stocks. The key takeaway here is that these are not four separate markets. They're four parts of a single, giant market, and they are constantly influencing each other in this perpetual dance.
Remember this number, 4. 4 asset classes, and they're all telling you a piece of the same story. Your job isn't to just listen to one of them, it's to hear the harmony, or maybe the lack of harmony, among all four. Only when you do that do you get a clear, unbiased picture of what the market is really trying to do.
So, how do we interpret this stance? How do we actually listen to what all four of these pillars are telling us at the same time? Well, there's a core concept that basically acts as a translator for the market's mood, and that concept is risk on versus risk off.
This right here, this is the key. Risk on and risk off is the language of institutional money flow. It tells you whether the big players, the smart money, are feeling optimistic and are out there looking for growth, or if they're fearful and running for safety. Understanding this dynamic is how you unlock the relationship between all four asset classes.
Let's break it down and make it super simple. In a risk-on environment, the vibe is positive. Money is flowing into assets that are considered riskier, like stocks, foreign currencies, and commodities. But in a risk-off environment, fear takes over. Capital flees those risky assets and rushes into things that are seen as safe havens, like government bonds and the US dollar.
Now let's talk about how this all comes together, because this is where it gets really powerful. When all four of these asset classes align perfectly, when they're all singing the same tune in either a risk-on or a risk-off environment, something truly magical happens. This is the exact condition that every single trader is looking for, whether they realize it or not.
Just take a second to look at this. This is the perfect symmetry that ICT calls a beautiful dovetail. In a risk-on environment, stocks, commodities, and foreign currencies should all be rallying, while bonds should be falling. In a risk-off world, it's the complete opposite. Bonds and the US dollar rally, and pretty much everything else falls. So for example, if you see the S&P 500 screaming higher and bonds are getting crushed, that is a huge green light for risk on. It should give you way more confidence to look for a long on something like Euro USD because the entire market is confirming that appetite for risk. When you see this alignment, the market is sending you an unmistakable message.
And the reward for actually listening to that message? Oh, it's immense. This is when you get those explosive, one-sided moves with just massive magnitude. These are the A-plus, high-profitability setups that look almost effortless when you look back at them, because the entire weight of the market was pushing them in one direction.
And here's why. This market harmony is your signal. It's confirmation that the large institutions, the smart money, are confidently deploying enormous amounts of capital on one side of the market. And that's what creates those powerful, clean, directional moves we all want to be a part of.
But this brings us to a really important warning. If understanding the whole market leads to all this clarity and opportunity, then ignoring it, having that tunnel vision on just one instrument, that leads to confusion, frustration, and ultimately failure.
So what happens when the music gets weird? When stocks are rallying but commodities are falling? Or what if bonds are selling off but so is the US dollar? This is what ICT calls decoupling, and it's a sign of deep uncertainty in the market. It's a giant red flag telling you to be careful.
This quote really gets to the heart of the danger. When you're trying to trade without this broader context, you are essentially flying blind. You have no framework, you have no way of understanding why a setup might be failing or why the market is suddenly so choppy. You're just guessing.
And this slide shows the downward spiral that follows. Let's walk through it. First, the market decouples and everything gets uncertain. But because you're not seeing the bigger picture, you keep trying to force trades that just aren't there. Then the losses start to pile up. Your drawdown gets bigger, and finally, and this is the most damaging part, your confidence is completely shattered. As ICT says, you lose your mind.
So, let's bring this all together into a clear, actionable framework. This month's content was not filler. It was the foundation. It's how you build true market clarity and how you avoid that painful downward spiral.
I think this quote says it all, right? The content you've learned is a critical, non-negotiable piece of the entire puzzle. It's the framework that separates a professional who reads the entire market from an amateur who's just clicking buttons based on a single chart.
So this is your call to action. I want you to go back through all the lessons from month 10, but this time don't look at them as separate topics. I want you to look at them through this new lens of multi-asset analysis. Your mission is to actively hunt for these connections. Look for that beautiful dovetail of risk on and risk off. Ask yourself, what are the bonds telling me about stocks right now? What are commodities telling me about currencies? When you start doing this, I promise, you'll have that aha moment where it all just clicks into place.
And I'll leave you with this one final thought to chew on. Trading is about listening. The question is, are you tuning into the full symphony of the market, or are you just trying to trade based on the sound of a single violin? The answer to that question is going to define your entire journey as a trader. If this video helped you connect some of the dots, do me a favor and hit that like button, and make sure you subscribe for more content like this. If you have any questions at all, drop them in the comments below, and a human will definitely get back to you. Until next time, safe trading.